welcome back to MMG. Let's do a quick update, short and sweet. This is mostly TA, but even if it's even if you don't listen to TA, this will be good. It's important. First of all, this is not financial advice. It could be completely wrong. Consult your licensed financial advisor before doing anything. Stocks, cryptos, all extremely volatile, extremely risky if you don't know what you're doing. And do not invest in anything you're not willing to lose or lose sleep over. Have stops in place. Have your emotions out. And let's get into this. So I am a swing trader, right? So I don't day trade, if you guys haven't noticed. I like to take big trades, not many trades, a handful of trades a year. And the less trades you take, I believe, mathematically and probability wise, the less mistakes you'll make. But you do have to get those major trades right? And I like to cut my losses short and ride my winners. And that's how I manage risk. That's like, the basics, the entire theory behind my strategy. All right. So 2 weeks ago, I said the all-time high is in for the S&P 500 at the price of 32.20, right? And right now, the price, today's Sunday. What's today's date? Today's date is the 12th, January 12th. And the current price of the S&P 500 is, it's 3,265, right? It's all-time high. I know I covered this in my last video. I'm just doing this for record's sake keeping. Was about 3,283 or 4, something like that, right? It's also on the 4 hourly on a 13 sell signal for the TDI, right? And I gave you guys all the reasons why I think this is extremely overextended, besides the fact that it is. I mean, you could just see, look at this move. This move has to lose momentum and volume. Trading volume, liquidity, all of it it's pretty low right now. So what I'm saying is it's running out of buyers and losing momentum and volume. Capital flows going into the market, right? And then, I had the other chart with that major trend line from 2009. And it's broken above it, that channel. So maybe I have the other chart. Either way, look. Here are all the major indices. We've got the NASDAQ here on the left. This is the S&P 500. This is the FANG index. This is the Dow. This is the Russell 2000. This is the Vanguard Global ETF for like everything, index. Not ETF, but index. These are daily charts. Or no, not all of them. They're all different. These are 3-day charts. It doesn't matter. If you look at the weekly, monthly, 3-day, daily, I mean, they're all overextended. Now, let me show you something. I'm also going to touch base on Bitcoin real quick towards the end of this video. All right, here's a screener. Here's a visualization of the market cap and the size of each company and their shares, right? their market cap. And first of all, what I always like to point out is, all right, here are some, the tech giants, right? Tech giants. And some financials. Look how big they are compared to the rest of the market. Where's your industrial section? Where's manufacturing and making shit? Remember, the United States used to be the industrial superpower of the world, and that's how it became the richest, I believe. Well, here, to give you guys a visual, look at GM and Ford down here. Look how small they are. Look how tiny they are. Look at Apple right here. It's insane. Let's take a look at the market cap of Ford. Ford is, give it a second to load. It's 36 billion market cap. All right. Apple is, I know it's over $1 trillion. It's 1.35 trillion. So 1,357 billion market cap. Now that's insane. They make phones and some tablets and laptops. And some overpriced earbuds. Alright? Do you think that's normal? You think that's right? Does that make sense? Look at Amazon. Let's see how big they are. Now, Amazon, I don't talk too much crap about Amazon because they do have a great business model with their shipping, and it's just convenient, and everyone just goes there. It's easy to buy things, great marketing. It's a good company. All right, they've automated everything, so it's a smart company, in my opinion, to take over the world. Although they just recently started actually making profits, right? They didn't make profits like 2 years ago. They weren't even making profits. All right, their market cap is almost at $1 trillion. 1 trillion. That's with a T. 942 billion right now market cap. So it's not going to take much to hit 1 trillion. Like I don't know. Maybe another $100 move in their stock, and they're over $1 trillion. Let's take a look at Google. Googly, Alphabet. 979 billion. Very close to $1 trillion. $50 move up, and they hit $1 trillion. Market cap. Facebook. What does Facebook do? Besides collect your data to be used against you and to manipulate psychologically the masses. They're at 622 billion. That's over half $1 trillion. What is it? It's a social media platform. What do they create? Nothing. It's just marketing. It's for marketing and selling data, right? Microsoft. So Microsoft has software, right, for every computer in the world. Bill Gates, richest person in the world, right? I mean, they started the computer revolution, right? They are at 1.2 trillion. So 1,236 billion market cap. That's a bit overstretched for even Microsoft. I mean, when you're $1 trillion company. All right, so let's look at some. So these are the biggest, right? Apple, Amazon, Google, Facebook, and Microsoft. These are the largest market cap companies in the world and in the U.S. markets, right? Equity markets. So those are the top. 5, 6. Now let's look at in the top 10, which would take us to ExxonMobil, which is oil. That should be top 10. But JP Morgan is larger, and so is Berkshire Hathaway. So financials are in the top 10, right? Let's take a look at JP. JP's market cap is at 431 billion. It's huge. For bank, there should be thousands. There used to be thousands of banks, right? Not just like 5 major ones. Where's Citigroup on here? I don't know. All right, so now look at this. How distorted the markets are. How much malinvestment and bubbly it's become. Berkshire Hathaway, Warren Buffett, right? Pretty much a giant hedge fund. They are at 559 billion market cap. A hedge fund, pretty much. I know they do all sorts of financial services. They buy homes. They give you insurance, all kinds of stuff. But this is a bit ridiculous. All right, guys? Now, any of you out there who like digging deep into stuff, you should look up. Now, here's the thing. Warren Buffett's pretty old. He might not care. But you should look into Bezos, Tim Apple. I'm joking, right? Because Trump said once he called the CEO Tim Apple. You should look if the insiders, the CEOs, CFOs for these major corporations, internationals pretty much, are selling shares. I mean, I haven't had time today to look into it. I'll look into it. But, is Zuckerberg selling? Or Google CEOs and CFOs and high corporate execs selling their shares? If I were them, I would be selling right now. Look how big Wells Fargo is. Look at Bank of America. I mean, those are no surprise, but they're pretty big. Look how big Visa is. Huge. The financial sector is way too large. You have to understand the stock market, the financial sector, and all these tech companies, they should be byproducts of actual real manufacturing, like making real things. Okay? Because having a digital economy doesn't really make much. It's just a bunch of people sitting in front of computer screens and, there's an argument to, all this social media and all this computer crap. A lot of people say, well, it makes everything more efficient. I don't know, because productivity overall has fallen in Western civilization, and maybe people are just really wasting a lot of time on the computer doing a whole lot of nothing, being productive. They're not actually building businesses with they're playing video games, they're on social media, shit talking, and you know what I mean. Now, am I being a hypocrite? Not really. I mean, I use the internet for marketing, right? But I play a little bit of video games, but not much. Like maybe 2 hours a week, not even, like an hour a week or something, not even. All right. Sometimes it helps you decompress. But most of the time I work out to decompress, and that's every day. Anyways, yeah, this doesn't look good. Just overall looking at what's going on with the economy and the markets, right? So why am I showing you guys how, if this doesn't show you that this is bubble territory, I don't know what it does. But you know what? Let me show you something else that could help you visualize this bubble economy. Where is it? So so these companies I just showed you with those giant market caps, right? I put them up on a chart to show you guys how parabolic their stock shares have gone. So here we go. Just give it a second. I'll cover a little bit of the news, and then we'll look at Bitcoin real quick. If this would just load. All right. Here's Apple. Here's Google, Alphabet. Here's JP Morgan. Here's Amazon. Here's Microsoft. And here's Berkshire Hathaway. This is monthly charts time frame. Each candlestick represents 1 month. And, you know, these charts go back to early 2000s. Early 2000s. Okay? End of 1999. Early 2000s. Or end of the 90s. What do you see here in common? They look pretty damn parabolic, guys. On the monthly. And even on the weekly. So, if you're looking at a super cycle, right? A super cycle of bull markets due to, let's say, 2 decades now, 3 decades of easy monetary policy and cash money printing by, you know, it really started with the Alan Greenspan and then, you know, Bernanke, Yellen, and now Powell. They created, you know, pretty much 2 decades of stocks going straight up. Yes, there was 2 major corrections of about 50 to 60%, which was the dot-com bubble, mortgage-backed security bubble popped, right? But now, this time around, I think it's going to be the everything bubble. Subprime auto loans, subprime mortgages, they're still all out there. Credit card debt just tapped out. Consumer tapped out. Think about this. This is good. This is good. 1 share of Apple is $310. An average American, like 70% of them, don't have like more than like $2,000 of savings in their bank account. So they could only buy like 5 or 4 shares of Apple. None of them could buy 1 share of Alphabet. Just think about that, how insane it is. How many of them can buy a share of Amazon? None of them. Like, only upper middle class and the rich can. Like, could afford these. Like who? Okay, if you're like a college kid or something, or you just got a good job for the first time in your life, and you have very low savings, are you gonna go and like buy a $300 share? Like, you could only buy 1 share. And I know you shouldn't look at a unit price. You should look at it percentage wise. But still, the average retail investor, you know, would look at the price of the share. They look at unit price. They don't look at, like, you know, percentage possible. But gains, you know, you guys understand what I'm saying. Like, you could buy $1,000 one share could be $1,000, but it could still go up like 200%. But, you know, your average investor doesn't look at it like that. They look at the actual price of the share. All right. So what I'm trying to say is this is pretty la la land ridiculous. We are in euphoria melt up blow off phase, in my opinion. That's also why 2 weeks ago I used some TA to try to time this, and I'm just looking at everything and I'm like, this is we're definitely towards the end stages. Can it go a little higher? Sure. But in my opinion, I wouldn't chase that. Who in their right mind would chase? Look at this. They've gone parabolic, guys. When prices go straight up, 9-degree angle on the monthly and weekly, that's parabolic, melt up, blow off top phase. That's the final four stage, the 4th phase in the Wall Street cheat sheet are what's his name's hyperwave theory thing, right? So it's what I want to show you guys. So as a swing trader, would I go long? No. I would just sit back, relax, and wait for some good possible shorts. Now, shorting is incredibly risky. Most people lose all their money shorting. The short sellers, the short side, those guys always lose their money. Because why? Because markets stay irrational way longer than you could stay solvent. And then, you know, the CEO might come out and say funds are secured and do the largest fraud in human history, but has no consequences. Here's Tesla. Daily chart. So what caused this move in the past few weeks? This parabolic move. That's all the shorts. The shorts getting squeezed out of their positions and getting crushed. They just all those shorts lost their money. So as a contrarian, and you know what? I like that. I like to see that because when all the shorts lose all their money, one, the shares are available to get so you can short. And then that's when I come in and I see an opportunity to then put on the short right after that. Because, this move was basically caused due to short squeeze. But this is perfectly aligned with possibly a market all-time top, or at least the top for this year. Of course, I said all-time high forever, which I don't know yet. We'll find out later in 2020 or 2021. But this is lined up pretty well, in my opinion, for me to go short. Now, not financial advice. Consult your licensed financial advisor if you go short, whatever. But when I do short, I don't short with a lot of money. You could always do an option, right? Just a couple $100. But if the option goes your way, they can make you a lot, right? So, look at this move. I mean, this is freaking ridiculous. Yeah, so not just that, a new truck just came out, the new Hummer EV. That thing looks pretty sweet, looks better, looks-wise. So there's a lot of competition coming out. And then there's everything else that I just don't feel like talking about right now in this video. But I'm just giving you guys an example. When something goes parabolic, it cannot sustain the momentum. It just runs out of buyers to buy at such extremes. By the way, Tesla's market cap is larger than Ford's. And maybe GM's. I'm not sure about GM, but Ford. Come on. Ford makes great trucks. Ford's been doing very good, actually. It's one of the better automotive companies out there. And they never needed a bailout. GM went under, right? Remember in 2008? They went under. And then the feds bailed them out. All right. What else? So that's pretty much it. Let's talk about gold for a little bit. So here's the 4-hour chart of gold. Well, you know what? Let me go back to my markets overview. Give it a second. Why is my computer slow today? I need to reboot it. All right. So look at the VIX. The VIX looks like it's catching a little bit of a bid here. And again, it's at all-time lows. So as a contrarian, VIX is the volatility index. Look at the dollar. This is what I want to talk about, the dollar. In my last video, I said, look, it's going to come up on the 200-day moving average, and it might reject the price, and it'll head back down. Unless we get a market correction, then it could possibly shoot up for the short term, next few weeks or months, as long as the stock market keeps dumping. Like if we get the major correction as I expect it to happen soon, like possibly this week starting, right? Then the dollar might actually shoot up and shoot above the 200 MA as a safe haven bid, right? So just be cognizant about that. But if the market doesn't correct this week or next week, then it might get rejected by the 200-day MA. Here's the 10-year yield. I still expect it to fall. And why is it falling? Because they're pushing it down. Now, if the market corrects, will it move up? It might try to, but what's going to happen is Powell will panic, and they will start talking real loosely. Like, they're going to start saying things like Mario Draghi used to say back in like the 2010 or 9 or whatever, that they'll do whatever it takes to keep the market from falling, and that'll actually push. The yields will drop then. And then I expect it to go back to the 1.5, 1.4. That's, again, very bullish for gold and silver. All right, so let's talk about gold and silver. Here's the 4-hourly time frame for gold. It's looking good. And the private members yesterday, day before, or Thursday, Wednesday, I was telling them it looks bullish. It still looks bullish, like we're going to get a rebound. We'll see if the price gets smashed Monday morning. Hopefully they don't. They might. But even if they do, it'll probably still rebound. Especially if we get a market correction. That's what I'm waiting for. I'm waiting for the market correction because that should shoot gold and silver up higher. And it might make new highs again within this month. All right. The 4-hourly looks bullish. We have a 1, 2, 3 count. When you get a 1, 2, 3, then usually that signals a 9 count to the upside. Or a 13 count. You never know. Let's take a look at the 12-hourly time frame. I know there's a sell signal on the 12-hourly, but like I said, there's other dynamics. And the oscillators, I mean, they're fairly oversold. And I'm just going to ignore that for now. And it does look bullish. My other indicator, you know, when these candlesticks are blue, that means buy. But let's take a look at the daily. So as long as next week we start trading above 1570, and if we could even test 1600, that's very bullish. That means that the correction, that was the correction and it's over with. We also have a bullish Ishimoku cloud here. If we could start ramping up, that should help the price shoot up as well. Oscillators are, they're neutral. They could pop back up on the daily, but I would say they're neutral for now. Let's take a look at the 3-day. So the 3-day, just looking at the candles and the count, the 9 count sell might have already been priced in because it's a 1 to 4 or 9 candle pullback. So this could have been just the one, right? I would say the 3-day is also neutral. Let's take a look at the weekly. Now, the weekly, interesting, right? The weekly is on a 6 count out of a 9 count to the upside. This is what I'm hoping for. I'm hoping we get a 7, 8, 9. So 3 more possible weeks of upside, and then we'll get possibly a large correction even in metals. But it all depends if this market corrects, right? Like I said in my last video, the first half of the correction, metals will rise. But if the correction becomes very scary and very fast and deep, right? Like it starts turning into a crash sort of scenario, then people start getting margin calls and then they start selling everything, including paper market, gold, silver, like futures and stocks. So that's how we're timing this, right? I'm trying to time this. It's not easy. MACD is crossing to the upside on the weekly. So that's bullish, but you know, the angle of this, I don't like it. Because sometimes, you know, it'll cross and then roll back over and go back down. I'm hoping this will sustain momentum and we'll get a cross to the upside. Divergence to the upside. Momentum oscillator is pretty high, but it could run a little hotter. RSI, it's high, but it could run hot again, right? Towards the... What I'm saying is momentum could... There's still more room to run for the momentum when you look at the relative strength index on the oscillator. Let's take a look at the monthly. Where is it? There we go. So the RSI is pretty overextended on the monthly, I won't lie. So is the momentum oscillator. So, but, you know, like I said, I think if the market's correct and the Fed panics, these could run hot for quite some time. You have to remember, these metals market's been in bear market, it's been suppressed for quite some time, and the fact that everyone's worried about a major correction in metals makes me believe that, you know, it's not going to happen for a few more weeks or months, because that would actually trick everyone who watches the metals markets, right? Not just that, if you look at this, we have a giant cup and handle, right? Cup and handle. You can see that, right? Here's the cup. And then the handle. It's hard to see because I have all kinds of drawing, but you can see that, right? So this is what I'm hoping for. Is this going to happen? I don't know. But this is what I'm hoping for. Breaks out from the cup and handle. We shoot up to, who knows, 1750, 18, I don't know. Maybe it'll go higher. It all depends on how the velocity of the correction in the stock markets, right? On the equities. That's what's going to determine how high gold will shoot out from this cup and handle. And then we'll get a big correction probably. And then some consolidation. And then we'll take it from there. All right. That's what I'm hoping will happen. Will that happen? It's not 100% guaranteed. Nothing ever is. You know, it might just, you know, for the next few weeks, just sell off again and then maybe break out. I don't know. But that's what I'm hoping for. That's what I'm betting on right now. Of course, if the trade goes wrong, right, if that doesn't happen, then I won't take losses. I'll take profits because I bought my leveraged ETFs and all my ETFs down here when they were incredibly cheap, right, compared to the price today. All right, so let's take a look at Bitcoin. But I have to go soon. All right, so I'm running out of time. I have to go somewhere. Look, the weekly, the MACD is about to have a bullish divergence. Oscillators are all oversold on the weekly. So yeah, the Moon Boys might actually get a nice rally for a few weeks or something, right? And it's breaking out of this bearish channel, right? This green line to the right is the halvening. The due date, supposedly. I mean, it changes a little bit, but that's when it's expected. So it could rally, like getting near it, maybe into February, maybe even to March or something, and then it might sell off right prior to the halvening. So buy the rumor, sell the fact, right? That's right now my quick analysis. We'll see. You know what? I will make another video tomorrow. All right, guys. Smash some likes, leave anything in the comments section, and to share my videos. I'd really appreciate it. So anyway, my channel grows, and I'll continue to do this. Until next time.